Greetings again from Sprott Money at sprottmoney.com. We have now reached the month of May 2025, and we are kicking off the month as we usually do with our precious metals projection video. I'm your host, Craig Hemke. Joining us, as per usual, is my good friend Chris Vermeulen of the technicaltraders.com. Chris, good to see you.
Always a pleasure. Yeah, thanks for having me.
Always appreciate your input, my friend. Hey, as we get started, the usual notice: this content didn't appear from nothing. Someone's got to pay for it, and the people paying for it are Sprott Money. So the best you can do is to thank them for all that they do by visiting sprottmoney.com, buying some metal. You can store your metal there. They'll ship it to you for free and insured if you buy more than $500, which at prices these days, that ain't hard to do. Anyway, go to sprottmoney.com or call them at 888-861-0775. Chris, as we get going, markets are everywhere.
They are.
For people that may be watching this for the first time, tell a bit about your background and what you do at the Technical Traders so they kind of know where you're coming from.
Yeah, sure. Well, from a really high level, I'm a technical trader. I focus on price action, and my whole focus really is to try to take advantage of market gyrations, large swings, and protect people and, of course, my own capital from bear markets and to profit from them. And that's kind of my whole mission. Is I follow price. I have a newsletter where I share video analysis, a lot like what you and I are about to share here, Craig, with everybody, except for I usually, zoom into the shorter term charts and we take advantage of the market swings and things like that. So more or less, I just share my analysis. I share my portfolio trades with subscribers, and we just follow price action. We manage risk, and we kind of ignore the news. And just, the only way as investors we make money is when the asset we own is moving in the direction we want, which is generally higher. And so that's what I follow price and manage those positions.
Well, that's important because, this last month has been crazy, and it's, been a news-driven, headline-driven market, but that's never the full picture.
Yeah.
And so it can be very helpful to have some of these technical signals. We'll try to hit a few of them here over the course of this show. I guess, Chris, maybe why don't we start with U.S. stocks in general, whether you want to use NASDAQ or the S&P. Wow, just crazy ever since the tariff announcements by President Trump back on about the 2nd or 3rd of April, sharply down and then recovering. And in a sense, I feel like we've just kind of gone through a wormhole in time. We're back to where, remember all the headlines in 2017 and 18 about trade war, and Al goes and see that and respond. But anyway, taking that all out of the picture, looking at it technically, what do you see?
Yeah, there's the market's definitely put in a high volatility kind of that big news driven move, as you just mentioned, Craig. Like everybody panicked and moved out of the market. You can see it in the price action. You can see it in the volume of people moving out, and the market typically is driven by emotions, and that's what we saw. And of course, anything that happens on a news-driven move, usually that move is given back. And of course, it has been given back, and we're right back to where we were pre that news. Now, overall, this looks like the market is trying to bounce. It looks like it wants to continue to go higher. It does have a short-term trend to the upside. And I do believe this is more of a bear market bounce. There's a lot of really interesting price action going on that we can touch on. I think, the sentiment right now has shifted. And it's funny because I have some charts here that show back here in February and March, I noticed everyone was trying to pick a bottom. They're saying, they're all buying on the pullback. This was a substantial pullback. And pretty much everybody was saying, I'm picking up more, I'm buying, stocks are at a discount, and they're picking up a bottom. And it's interesting, when we go and we look at this chart here, this is showing us how much money was piling into the leveraged long ETFs. And this is February and March. We saw 1 month of money just piling in of people picking the bottom. And I even posted a video on this. I'm like, bottom pickers, be aware, like the market, if everybody's trying to pick a bottom, the bottom is not in. And so we saw lots of that taking place. And then, of course, we ended up seeing the stock market have this huge precipitous fall, which all these people with the leverage more or less started to panic. And this big down day here on a Friday, I remember posting and saying, listen, this is a close near the lows after a huge sell-off. And this was a Friday. I said, we're probably going to see everyone panic over the weekend. They're going to put their orders in to get out on Monday. We're going to see the market gap lower. We're going to see a big wave of selling in the morning. And then suddenly we're going to probably see the market put in a washout low and go higher. And it's funny because everyone here, Craig, was picking a bottom, and everyone right down here bailed out of their positions
Right.
and started betting on the downside. And check this out. So I overlaid the Google Trends searches of people searching inverse exchange traded funds.
Oh boy.
And right over here, everybody was picking a bottom. And then like 5 days later, the bottom falls out and they all bail out of their long positions. And then they all start looking to play, how do I bet on the falling pricing with inverse ETFs? And of course, it was like a signature bottom. We called this the day before, just like a signature type move. And now the market's been going higher. So there's a lot of these gyrations in the stock market. But to kind of go back onto what you were saying, where do the markets stand right now? Well, the stock market, I mean, we've got the Fed coming out today. You and I are talking about this. This is May 7th. So by the time people see this, the Fed news will come out. We're probably going to have some big haywire, huge moves across the board, probably in bonds, gold, stocks. But we have to let that dust settle. But right now, the bias is still to the upside. And I think we're going to see this market try to break these highs. This will be both on the SP 500 and the NASDAQ, because a lot of people are still betting on the short side. And if we break this high, we're going to see a short squeeze, and there's still some decent upside potential before we go into a bear market phase. And I have a longer term chart. I actually drew two charts here. One is our weekly chart of the S&P 500. This is 2007, 2008 market top. We had a bear market signal. And then, of course, we sold off and went into a 57% decline. Well, we have something very similar right now. We have a bear market signal again. And what we're seeing here is this bounce up. And more or less, if we break this little pivot high, this bounce right back here, it's going to create that short squeeze. And then we're going to see probably the market go into a much bigger sell-off. Very similar to what we saw over here, where the market puts in a bounce. Or the big question is, are we here or are we coming up to this bounce over here?
Yeah.
So that's the big question. I believe we're now in a bear market phase. We started a new little bull market back in 2023 when it turned back up and we had a really nice run up, but now we've turned back down. And the big picture here, while I'm short-term bullish, longer term, I think we're going to see things go even further down. And I'm calling this like a dead cat bounce, a bear market rally. And a really good visual of this, Craig, is to take a look at the comparison. This is the monthly chart of the SP 500 at the top. This is 2007, 2008. And the bottom one is right where we are right now, the monthly. And we had this break to the downside. And I have the search terms for Google, the big spike on the big first break in 2008. Everybody started searching for bear markets in Google. Well, we just had the first spike here as well on the S&P 500. And it's funny because I'm getting pushback. People are like, well, the sentiment is super bearish. Everyone seems to be bearish on the financial sentiment indicators. And they're saying if everybody's already bearish, the bottom is in. Well, I always think of it this way. If you think of the ocean and the tide going down, if we know the tide is going to top out, say, at 6 o'clock tonight, and it's going to start going down through the night, just because we know the tide's going down doesn't mean it's not going to go down. The tide is a huge cycle that we can't stop. And these economic cycles are the same. These are global cycles that just because we know like we're entering bear market territory doesn't mean it's over. In fact, we're going to see multiple waves of huge fear over and over again as the bear market evolves. And so I think we're turning this tide. And so we're definitely realizing that I think this market could rally and bounce for a few months. We could see it move higher like it did just before it went into the stage 4 financial, reset, which I believe we're going to go into another reset here in this year and next year.
So in the short term, there's potential for a continued bounce, maybe a little short squeeze, right?
Yep.
Gets up. What's the green line there?
This is the 150-day moving average,
And gets up above there and kind of
it's a pretty key level.
Yeah. What then would then concern you? Get above there and then break back down and then start taking out others in the weeks ahead?
Yeah, naturally the market likes to try to always get wherever the crowded trade is, it tries to get them offside. So I think a lot of people are actually betting on a bearish environment here, expecting this
Hmm.
market to roll over. But if we do break this high, and if this market pushes up through here above this level, we're going to see a lot of people cover those shorts. It's going to create people to also get long. It's going to create a short squeeze and a wave of buying. And then I think we're going to see that stall out and get sold off very quickly. And then we're going to go into like a
Yeah.
much bigger correction going forward. So short term wise, I'm still bullish on this chart pattern. We do have a couple patterns here pointing to about a 4 or 5% rally in the S&P 500 and the Nasdaq over the next week or two. Really, it could unfold, and then I think it's going to run out of steam and sell off. But we got a lot going on with the Fed and the tariffs that it could create a big pop and some noise in the market. But overall, short term, I'm expecting this market to kind of grind a little bit higher in this dead cat bounce.
All right. Well, be interesting to talk to you next month. That's for sure, and see where
Hmm.
we go, even just over the next 4 weeks. In our remaining time, let's talk about the precious metals because they've had
Hmm.
it's just such a crazy time, and I know silver is driving a lot of folks crazy. But let's start with gold.
Okay.
By my count, Chris, as we record this, today's the 20th day. We've had 6 days where gold has rallied over $90 in the
Hmm.
last 20 days. Now, we've also had a couple days where the gold has fallen nearly $100. Crazy volatility. What I wanted to ask you about is I keep reading people on X and other sites that say, oh, from a technical perspective, it's so overbought and such a crowded trade. And I've been writing about the commitment of traders report, and more fundamental stuff.
Yep.
Um, but on the technical side, what do you see?
Yeah, there's a lot going on. I mean, if we break it down into some different scenarios, so I'm in the camp that it is extremely overbought. It's a crowded trade. I think you and I showed these charts and talked about this the last time you and I were on, but more or less, I don't know if I have the chart here. I don't have the chart on me at the moment, but pretty much gold hit its measured move here at this
Hmm.
27 2800. It hit another measured move back over here. It hit another measured move back over here. It hit another measured move back over here and another one over here. Now, the reason I bring this up is once you've hit a measured move, sometimes you can have a blow off top or a kind of a bubble phase or a crowded trade plate or whatever you want to call it. Each of these, it may not look like it, but every time we've hit a measured move and then it becomes that crowded play where everyone seems to be piling into it. Each one of these gold rallied roughly 22 to 24%. And it's right where we're at right now.
Okay.
And to me, that is like the crowded play. Once we've hit that target and kind of the masses have FOMO, because I see this all the time. Everybody feels like they're missing out on gold if they're not in it, and they're piling in and they're driving the markets up. So this feels like that crowded FOMO trade, which is why some people are saying it's like way overbought. And I believe it is overbought temporarily. I do think we're going to come way back down and have a sharp pullback. So longer term, looking forward, I do believe we're going to see gold have a correction, and it could pull back to 26, 2400, maybe even 2200 if we go into a big financial reset. And we've seen this over and over again. The 2000 was 34% correction. If we look at where that is on this chart, it brings us back down to about 20, 22, 2300, which is also a Fibonacci retracement level. It's actually a sweet spot where it should pull back and it would be actually very bullish. And then it could turn around and skyrocket up to, 7, 8, 12,000 after that. So short term, if you're a short term trader, like focusing on the daily chart, it is still in a strong uptrend. You really don't want to be trying to pick a top. You don't want to be betting against it. You should just know that this is like borrowed time or free money if you're long and riding it up. And the short-term chart, based on this reversal that we've seen in the past week, is pointing to a fairly significant push to the upside now. It looks like gold could rally to about 3750 as that next target. So this here is a bull chart, a bull flag pattern. It rallies up, flags against the direction. And then, of course, I think we're going to rally up to 3540, somewhere in there, and then up to 3750. So I think gold has more potential to blow off and continue to shoot higher. And that's what gold does in this type of environment. Typically, when we have this type of stage three topping phase that the stock market and the economy is in, we tend to see gold, fairly specifically gold, do come to life and outperform everything right near a stock market top. So that's kind of where I see that scenario is still bullish on gold short term, but I think 6, 8, 12 months from now, gold will be much cheaper. It'll sell off with the stock market. And because almost everything goes down when the economy collapses and we go into a recession. And a good example of that is if we take a look at gold, just these three trading sessions. These were the 3 days that the S&P 500 had that collapse in price where the panic hit the market.
Mm-hmm.
These right here, this is the first time we've had that bout of bear market mentality where everybody literally freaked out,
Sell everything.
bailed out of their trades, and then they started finding out how do they profit from a bear market. When we have this kind of fear in the market, it
Mm-hmm.
pulls gold down. So those days are exactly what hit gold. And so you can imagine gold fell 7.5% on those 3 days, which is huge for gold. Just imagine if you're in a bear market for 6, 8, 12 months, and we have every week we have a few of those big down days that pull everything down. So gold probably won't be immune to it. I think gold will pull back, and I think it's going to be an opportunity, as you and I have talked about. But you definitely don't want to be betting against gold right now. It is kind of in that parabolic blow off phase. It's kind of in a little bit of a bubble move, and it's to me, it's very high risk. It could, in one monthly red bar, it could reverse down so quickly, it'll make people's heads spin in terms of how it can wipe out price action. We could see, a big pullback in price, which we've seen in the past. One huge blow off move is more than wiped out the very next month. And I
Mm-hmm.
believe we're kind of in this nosebleed territory. So just be cautious. I think if you're looking to buy gold and you have FOMO, I think you could probably buy it at the same or a much better price if you just give it a bit of time. And it'll be ready for the next leg up when you get into it.
Let's discuss silver then too. Because unlike, I mean, everybody's talking about the gold silver ratio being over 100, and
Mhm.
gold making all these new all-time highs and silver just kind of putzing along. Let's wrap up with silver. What do you see there?
Yeah, silver definitely it's not my thing right now. I like silver and I like miners when if we have a financial reset, that's when I'm excited about silver and miners. Silver right now I think carries a ton of volatility. It's the daily chart really shows it very clearly. As soon as we hit a bout of selling, those waves of fear in the stock market, you can
Yeah,
see what silver does. It fell like 22 or 24% in a few days.
brutal.
It is a small market. When people freak out and they hit liquidation, they sell things, silver gets hit very hard. So it's kind of like walking through a landmine. I do think silver has potential, though, right now to rally to about $38 an ounce, which is a pretty substantial move.
Yeah,
This is the Fibonacci measured extension move to the upside. We got a rally, we got this bull flag pattern, and it shows that it could go all the way up to about 38. So percentage wise, if it can get traction and hook up here, it could have a very explosive move. But as you know, silver is very tough to trade because it sometimes takes forever to etch out some growth, and then boom, it wipes it all out in a couple of days. So
it
it's
sure
very difficult. You're kind of like you got to be in there and you got to ride the volatility, put in time, and hope for that pop. But
Yeah,
pops, will probably be fizzled out. If it hits 38, I would expect it's probably going to come down very sharply. I think it'll be a very quick, crowded trade move, kind of like what we saw over here. You see a big pop, takes about 2 or 3 days to work itself out, and then it just fizzles out again. So silver and miners do have bullish chart patterns along with gold. They are the favorite asset right now. They're holding up very well. So they're not a bad play. People just need to realize, I think they're not like a buy and hold here. It's more like get in, make some money, protect your position, like manage it, and get out, and then look for a fresh trade. People buying right now, I think for the long term, you're kind of buying at kind of a high price. I think you can pick it up a little bit better price down the road.
well, we'll see. Yeah, it's good. It's interesting how that picture can change. You
Yeah,
think of even just within the last month, as everything was crashing, it's like, oh boy. And then it turns right around.
yeah,
Really remarkable. That silver, yeah, I think we all kind of deal with a little PTSD. Uh,
yeah.
it just seems like you said, it's always a stairway up and the elevator down.
Yeah.
Anyway, Chris, thank you for your time. It's always great to visit with you and get your perspective.
Yeah, no problem.
Again, people can find your work at thetechnicaltraders.com. Is that right?
Yeah, or on YouTube, just search up the Technical Traders. I share daily analysis there, and yeah, you can stay up to speed with all the short-term charts.
Awesome. I was sitting there trying not to sneeze there for a second, and people wondering what the heck I'm doing. That old trick.
The trick is
Anyway,
to
Chris,
push your tongue on the front of your front teeth, and it gets rid of the sneeze. It's
hey,
weird.
look at that. It worked. All right. Hey, thank you, Chris. Thank you, everybody, for watching. And again, please be sure to like, subscribe to Sprott Money on whatever channel you've been watching so you're notified later this month as more content comes from Sprott Money. But in the meantime, it's time to sign off. Thank you for Sprott Money for putting this together. And thank you, Chris, for your time.
No problem, Greg. Take care, everybody. Bye-bye.
And from all of us at Sprott Money, sprottmoney.com. Again, keep an eye on this channel. We'll have more content as May continues.